All right, this is the weekly coffee video for the week of Monday, September 16th. Still reflects the December contract. Nice rally last week. We clearly settled above that 99 handle resistance, now support in the 99.70 to 99.95 area. 99.70 being really a short-term 4-week ascending channel top that is now below the market. And the high of the move low on the weekly continuation chart at 99.95. This is a floor of support now that should yield at least 105.75. I'm thinking probably this week, given the heightened volatility. And I am more inclined now to say that the market, given the heightened volatility, can quite easily over the next several weeks, 3 to 5 weeks, push into the much more significant 110.60 to 114.60 region. So just keep that in mind. 105.75, if tested this week, can contain weekly buying pressures, but I wouldn't be surprised if we settled above it. And if so, that sets off follow-through buying, secondary buying, into the 110.60 to 114.60 region within another week, 2 or 3 at the very most. That upper area, the top of which is 114.60, illustrated on page 1, able to contain buying through the balance of the year. It's also a significant upside continuation point through the balance of the year, and I'll talk about that in a moment. But let's take a look at some charts here. First and foremost is the one that we actually see on the chart itself. Actually, we don't show this one on the newsletter. Here's the 105.75 speed line. It can contain weekly buying pressures. And inside this area, 99.70 to 105.75, the market could actually sort of hold into a two-sided framework for a week, 2 or 3. That is a possible scenario. But given this heightened volatility, 105.75 I think is prone to violation. And if, as I said, we settle above it this week on Friday, then expect, let's take a look at the 110.60 level. This is a long-term channel top on the weekly continuation chart that actually held the July highs. We pushed through it a couple weeks in a row, never settled above it. So that's that. And also 114.60, which actually is illustrated on the newsletter this week. And this is just a simple chart formation that we came close to testing in July, but never did. So it's 110.60 to 114.60 is our ceiling through the balance of the year. And if we close the week this Friday above 105.75, you should expect that. I think you should allow for it anyway. It is a clear possibility now. Let me take a look here. This is long term. I'm going to update this chart right here as we speak. This is actually 129.30, roughly speaking. If we settle above the 114.60, a channel top, which, bear with me here, is this, okay? Then we've got 3 to 5 weeks, couple of months perhaps of bullish continuation into the 129 handle. So I'm just putting that out there as well. And in fact, I do think, and I said this some months ago at the time, before we sold off in the summer highs, that if we settle above 114.60, let's say this week, and I don't see that happening, but if we did, I do see this 129.30 is an area that can contain monthly buying pressures along the way, but big picture, by the end of 2020, we could certainly push into this, I'm just going to call this 155 for the time being, 155 even. So I'm going to say 114.60 is a significant pivot point into next year, below which we can certainly rotate south again, and above which that 155 handle not out of the question over the next full year of trade, with a very respectable sort of a stopping point for a month or two in the 129 handle. Let's talk downside. I still have 93.70. This is the low from May on the weekly, on the December contract. This is December contract data, and it held nicely here with the 93.40 low about a month ago. It is our downward pivot point. So if the market not only, let's take a look at the chart again, not only settles back below this 99.70 formation, let me rephrase this. Closing the week Friday below 99.70 indicates the 93.70 within a week, 2 or 3. 93.70 able to contain weekly selling pressures when tested. It's also a meaningful downside pivot point into October trade. So if, surprise, we settled the week Friday below 93.70, then you've got the 82.83 handle as a likely 3 to 5 week target. 82.90 is a base of support, and it is bear with me here, I'm babbling, mumbling. That is about it, actually. 82.90. Along on the way down, you've got 87.95, and I have that in the newsletter itself. But quite honestly, if we close below 93.70, expect that long-term channel bottom at 82.90 within 3 to 5 weeks, where we can bottom out into next spring, possibly through next year. And just to sort of re-clarify, bullish this week, actually bullish into October, above the 99 handle support, expecting at least 105.75, and quite possibly you should allow for the 110.60 to 114.60 region, possibly in as little as 3 to 5 weeks, where we can top out through the balance of the year. Closing this week Friday below 99.70, expect 93.70 within 1-2 weeks, 3 at the most, I think a couple weeks at the most. Able to contain weekly selling pressures when tested, and it is also the downward pivot point into October trade. Closing below it would indicate this 82.90 formation within 3 to 5 weeks, where we can bottom out really into December contract life. Let's put it that way. And I do believe that's all that needs to be said for this week's coffee video.